All right, let's just dive right into this explainer. Today, we're unpacking the incredible momentum, the sheer massive scale, and honestly, some hidden bottlenecks behind a company that is quietly powering the entire backbone of the AI revolution. I'm talking about Arista Networks. We're going to look at their latest financial blowout, understand their technological moat, and then examine a really fascinating, almost paradoxical challenge they're facing right now.
To understand why Wall Street is literally obsessed with this company right now, you really just have to look at this one number, 83.9%. Arista's stock has surged a staggering 83.9% over a recent 24-month period. I mean, that level of growth, it's captured the undivided attention of institutional tech analysts and retail investors alike. They aren't just participating in the recent tech rally, they're actually helping lead it.
And analysts over at Trefis recently summed it up perfectly. They called the company an absolute AI networking monster. Think about it. Arista isn't building the AI models, and they aren't fabricating the GPUs themselves. Instead, they're riding this massive infrastructure wave by providing the specialized nervous system that allows all those AI processors to communicate at light speed.
So, let's look at the first piece of the puzzle, their Q1 2026 earnings blowout.
Looking at the actual numbers here, Arista absolutely crushed their Q1 2026 expectations. They posted a 35.1% year-over-year revenue jump. That landed them at a massive $2.71 billion for the quarter, which was way ahead of the $2.62 billion Wall Street was expecting. And earnings per share? That followed suit, growing nearly 32%. We are not just talking about steady growth here, this is explosive acceleration. Now, there's a really fascinating contrast playing out here that tells a much broader story about the future of networking. Check this out. While Arista is booming with massive growth thanks to its specialized high-performance AI focus, legacy giant Cisco is actually seeing revenue declines. They dropped 6% recently. We're witnessing a clear bifurcation in the market, right? Specialized, software-driven solutions are just aggressively stealing market share from legacy incumbents.
And all of this top-line momentum? It translated directly into cold, hard cash. The quarter generated a record-breaking $1.69 billion in operating cash flow. To put that into perspective for a second, that is enough to make it the strongest cash generation in Arista's entire corporate history. It gives them this incredible war chest to just pour back into research and development.
Which brings us to our next section, understanding the Arista architectural moat.
This right here is the physical hardware driving their success. It's their universal leaf-spine data center and AI switching platforms. See, instead of building incongruent, siloed networks, Arista has completely unified the architecture. Whether it's for the AI center, the campus, or the WAN, they provide platforms that scale effortlessly. They offer massive throughput with incredibly low latency, which, as you probably know, is exactly what AI workloads demand.
But here's the thing. The hardware is only half the story. Their real secret weapon, their true architectural moat, really, is their software brain, known as EOS, or the Extensible Operating System. Because EOS runs a single image across every single Arista device, customers get this totally seamless, unified, and highly programmable experience. It drastically lowers operational costs and simplifies network design. And honestly, it's a huge reason why their customer satisfaction scores are just sky high.
They're absolutely dominating the AI space right now by executing a brilliant three-pronged AI fabric strategy. They're targeting scale up, scale out, and scale across use cases. They already have over 100 customers deploying massive 800 gigabit networks, and they're pushing aggressively toward 1.6 terabit production by next year. No slowing down. Plus, they just unveiled their new XPO pluggable optics, which already has the endorsement of over 100 different vendors. Basically, Arista is setting the speed limit for the entire industry. But it's not all smooth sailing. Let's talk about the supply chain squeeze. Right now, they're facing severe shortages across the board. We're talking a lack of wafers, silicon chips, CPUs, optics, memory, you name it. The demand for AI hardware is just so voracious that global fabrication facilities literally cannot keep up. This is creating painful 52-week lead times. That means some of Arista's fastest-growing clients are waiting a full calendar year for the gear they desperately need today. So, to combat this crippling delay, Arista's management team had to get super aggressive. They've made a staggering $8.9 billion in multi-year purchase commitments just to secure their raw components. Let that sink in. Nearly $9 billion. They're essentially buying their place in line years in advance just to make sure their hyperscale cloud and AI customers don't go hungry. However, this aggressive strategy definitely comes with a steep cost. Because Arista is eating premium costs to secure these really scarce parts, their gross margins are going to feel the squeeze. Actually, management has openly stated they expect gross margins to be capped between 62% and 64% this year. They're basically choosing to sacrifice a bit of margin today to guarantee supply continuity and lock in market share for tomorrow.
That leads into our next section, the AI concentration risk.
Let's take a look at their internal targets for a second. They recently raised their AI networking revenue target to a massive $3.5 billion for the year. Meanwhile, their campus networking goal, that remained totally flat at $1.25 billion. Going back to a great metaphor from the analysts at Traphis, AI is now the massive lead act on stage, while former equals like their enterprise campus networking business have basically become a distant backing band.
So what you should really take away from this is that holding Arista today is a highly concentrated bet. As Traphis noted, Arista has quietly morphed into a pure play on the AI build-out. Their fortunes, their technology roadmap, their supply chain priorities, they are now completely tethered to the continued uninterrupted explosion of AI infrastructure. If AI spending slows down even a little bit, Arista is going to feel it immediately.
Finally, let's look at the Wall Street verdict.
Looking at the analysts' price targets, the consensus remains incredibly bullish. With the stock trading around $159, the average Wall Street target sits up at $185, with highs going all the way up to $210. This signals that, overwhelmingly, the market believes the sheer tidal wave of AI demand completely outweighs any of those near-term margin pressures or supply bottlenecks we just talked about. And Arista's management confirmed this optimism by raising their own 2026 outlook. They are now guiding for $11.5 billion in revenue. That represents nearly 28% growth for the year, all while maintaining a stellar 46% operating margin. They are literally doubling their AI sales annually, which just proves their absolute confidence in navigating this golden bottleneck.
Which leaves us with a final, really fascinating thought to ponder. With Arista scrambling to lock down nearly $9 billion in parts just to keep up with current orders, and with specialized networks so rapidly replacing legacy systems, you have to wonder, is this massive AI infrastructure wave we're seeing right now just the opening act? Thanks for joining me on this explainer, and definitely keep your eyes on the data centers, because that, my friends, is where the future is being built.